Welcome to Stephen Johnson's Socks. I have not been trading again this week because my funds are locked in an Emirates MBD banking system, so they could be anywhere with a drug dealer in Colombia to a mountain goat in Timbuktu. But they're bloody stuck, and I'm hoping they're going to come in on Monday or Tuesday because I do want to trade. But for this episode, it's still going to be riveting. It's not going to be humdrum. It's going to be riveting. It's going to be humdrum. We're going to have an astute run through of the trader checklist Sykes sliding scale. We've been covering it in detail on the podcast back-to-back episodes. Please go on steadytrade.com and watch the podcast episodes covering all of the different indicators. If you are in your first year of trading and you haven't watched trader checklist, I'd at least recommend you watch the stocks to trade, steady trade episodes, because you need to know all of the different indicators. What's the catalyst? What's the reason it's up? What's the risk reward? What's the ease of entry? What are the market conditions? This is all covered in our recent podcast collection, me and the fantastic Tim Bowen. So I'll say no more. What I'm going to do is I'm going to pick a trade I spotted this week. I've still been watching every day. I'm going to give it my rating on the Sykes sliding scale, and then maybe you can comment where you would have differed. CLDC, CLDC, CLDC. So, and I just want you guys to know I'm very, very, very excited to get back on the trade. And I mean, through no fault of my own, I've been off for a couple of weeks, but I've still been watching. I'm still raring to get back into it. This will never leave me. I love trading, and I'm very excited to get back into it after a small break, but I definitely did burn out. But first of all, let's go into the scale. So the Sykes sliding scale is what's the pattern, what's the risk reward, ease of entry, past performance, what time is it, reason catalyst, market environment. Been doing this on Steady Trade over and over and over. If you want to see the episodes, Steady Trade, look at me, I'm on the internet. I'm on the internet! It's kind of mental. You can submit your audio here if you want to like be on the show and stuff with hosts Tim Bowen and Jeevan Stonson. And he has all the episodes, trader checklist, trader checklist, trader checklist, trader checklist, new millionaire Mark Crook, yeah, and it goes on and on and on. It's fun. I've got a website and I'm on stocks trading shit. Was a dream about a year ago, and I'm still doing it. But let's look at CLDC. So pattern and price. Say for example, we look at CLDC as a short at the market open on this day where it spiked up. Well, the first two things I would think about is like, what kind of pattern is it for me? Well, it's the gap and crap. What kind of price am I getting? I remember watching this. It was only up. It was up about 25% at this point. I'd missed it. Yeah, it was coming down, coming down, coming down. So if I was going to take a short, let's say half at the market open, half just before the market open, and half shorting into a spike in the 180s, cutting in the 190s. So I was going to start at here, and my goal would be to take another half here, and obviously if it went above here with strength, I'd be out. So it was up about 26, 27% here. It was up about 14, 15, 16, 17% here. So it's at the lower range of where I would like to short it. But when you look at fucking pop-ups, but when you look at the chart, I mean, you've got like, it's a 20 million float, which is a nice size float. The volume on the day turned out only to be a million. It only traded like 50 to 100,000 pre-market. So very low pre-market. Lots of people underwater. If we go back to the history, it's just got people trapped all the way. It's got like, if you zoom in, it's just got a ton of just failed spikes. Like every time it gaps up, it comes down. Like it spiked, day two, fail. This was a gap up and fail. This was a gap up and fail. So whenever you get this kind of chart, and every now and then it has like these little runs where it did kind of run here, but then it just came straight back down, couldn't hold it. Here it had decent, well, not really good volume. It's had tiny volume, but it's just give it all back again and again. The only time it's really ran is when it had out of nowhere, Chinese company, when it had out of nowhere below 10 million volume. But generally after this, you'll get like a bouncing ball. So you'll get your big spike up to here on 10 million volume, and then the next time it'll be a spike up to here, just because it's got back holders and everyone's selling into the spikes. So unless you've got like a 30, 40, 50 million day, you just can't get as high again. Generally the spikes will just be a bouncing ball, lower, 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 lower. This one just didn't have the volume to come through. So we're looking on, let's have a look. we're looking at the stock on this day, which looks really insignificant compared to, oops, wrong indicator. It looks really insignificant compared to the recent run it's had, and you might be like, Jeevan, this stock's a former runner. It can go from the 1s to the 7s, and it's true, it can go to the 1s to the 7s, but it needed 10 million volume to go from the 1s to the 6s, and then another 10 million to go to the 7s. So if it's only traded 100,000 pre-market, that means it's likely only going to trade about 1 mil on the day unless it has news during the day, because generally pre-market is a good indicator of how much it's going to trade during the day. So you know it's only going to trade 1 million, and you know that you've got the full float, 20 million's underwater. So you're going to need about 30, 40, 50 million for people to get this anywhere near the 4s, 5s, and 6s. And a lot of people are going to short it because they know that it's had this run and everyone's underwater. No longs are going to buy because they know everyone's underwater. So it's immediately just going to crash. So it's a very, very nice pattern. And when you get this little push into the 30%, well, it's not like I prefer to be up 40, 50%. I'll still take like 20, 30%. So I'd give that like, honestly, I'd give it an 18. I'd like to give it a 20 if it was up like 40%, but up 30% with such a bad chart, I think it's fine. I mean, when I look at my risk reward, we're basically shortening the 170s, adding to the 185, so I'll have about a 183 average. I'm risking off the 190, so I'm risking about 7, 8, 9, maybe 10, even 12 cents with slippage if it blows through. But best case scenario, worst case is 12 cents you're going to lose. Best case was actually you're going to take 50 cents, so that's like 4 to 1 risk reward. So I mean, I'd give that a 20. Ease of entry and exit, it's a bit of a low float. It's a Chinese stock and it's manipulated. I mean, it's only traded like 50, 100,000, so I'd be scared that out of nowhere 100,000, 150,000 bid will come through at the open. Because when it's trading only like in the opening candle, it only traded 40,000 shares, which means it can be manipulated. So I'd give this about a 6. I'm a bit scared when it's not trading much volume and it's running between the 160s and the 150s. That's a bit of a spread I don't want to be involved in. So I mean, I'd even give it a 5. You can get in and out, but it's not perfect for me. Past performance and history is spiking every time it fails. So, I mean, you have got the former runner when it did run, so maybe we'll give it a 9, but I mean, I'll give it a 10 because that former runner now means that it's even more likely that it's going to fail. Let's have a look at the catalyst. The catalyst, China Lending Corporation announces 20 million injection. And you can see by the chart, the company's just diluting its shareholders all the time, and this is why it's having its big red flags. If you're also looking at the SEC filings, you can see that it's constantly diluting the float. So this company's not really making much money. It's a financial credit service, which isn't my favorite kind of credit. The fact that I got given 20 million is somewhat news. It's obviously, but the company overall is just totally fucked, in my opinion. So I mean, the catalyst is okay. I mean, I give it a 5. It's not a good catalyst. It's not a bad. It's not like a fucked up made catalyst. Like there is a dollar amount. It's not like there's a big offer coming around the corner and it's going to change the world. But we'll not name the partner. We'll not name the money. I mean, there is a dollar value there. So maybe we'll give it a 6. But I'm struggling between a 5 and a 6 because I don't think $20 million is going to change the future of this company. And I think without all them people underwater, it doesn't really matter. Give it a 6, okay. I'm gonna change this to a 17 because I think the price in the pattern isn't. It's an excellent pattern, but I don't think you're getting the great price. I think it should be up 50, 60% for it to be really good. But 17's fair. Market environment, it's quiet out there. There's not a lot of volume, which is kind of good for shorts because there's not a lot of buyers, and as long as it's not manipulated, you're fine. So I'd give the market environment, I'd give it about a 6. It's not like everything's failing these days. Stuff is running, so I'd give it a 6. And that totals an 84. Now, an 84 for me is a very fucking good score. I think anything above 80 is a definite trade. Anything between 70 and 80 is more of a maybe. Anything above 80 is a solid trade. I mean, all the main indicators, you've got very high grades on there. So what would you give it? What would you differ on? Hit us up, let us know. I'd be interested to know. Thanks a lot for watching. And you'll probably be sick of us saying this over and over and over, but like, and I'm not being self-indulgent and I'm not being like whingy, but I want you guys to realize, like, just so you know, I was literally working like 9 a.m. till 1 a.m. every day for 2 years. And then all of a sudden, like, shit started going wrong. Like, I started getting overweight. I started not being as happy anymore. I started like hating what I was doing, kind of thing. Like, just because I was not having any time to myself, I was like, oh, another podcast. Oh, and that's like, I fucking love the podcast. Like, I love it, but when it's mixed with when I'm working 20 hours a day or 18 hours a day, like, you start hating shit, like hating stuff that you love. And I was like, don't want to fucking trade. I'll just short this and whatever. And subconsciously, it's almost like you want to lose. So the break has been fucking brilliant. And if the money doesn't come in next week, like, it's a shame because I really want to trade, but I'm in no rush. And August's slow anyway. So I'll be here forever. I'll be making the videos here forever. But taking a break sometimes is important. And you've got to really pay attention to your mind, your thoughts, your inner fucking child. Feeling fucking good. And that's it, baby. That's it, baby.
And hot like wasabi when I bust rhymes. Big like Leanne rhymes, because I'm all about value. Bert Camper's got the mad hits. You try to match wits, you try to hold me but I bust through. Gonna make a break and take a bake out like a stinking Nick and shake out like vanilla. It's the finest of the flavors. Gonna see the show cause then you'll know the vertigo is gonna go, cause it's so dangerous you'll have to sign a waiver. How can I help it if I think you're funny when you're mad? Trying hard not to smile though I feel bad. I'm the kind of guy who laughs at a funeral. Can't understand what I mean, well you soon will. I have a tendency to wear my mind on my sleeve. I have a history of taking off my shirt. It's been 1 week since you looked at me.